Good morning, everybody. Happy Monday, Cinco de Mayo, May 5th, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for another edition of our Daily Bites, where we bring the markets to you every Monday and Thursday morning, roughly around 8:30, 8:45. Sorry, we're running a little bit late today. Let's take a look at the markets here and what's been happening and what we have to look forward to this week. So futures are selling off quite a bit this morning, down close to 1%. No surprise, really, right? Markets have been up 8, 9 days in a row. We can't keep that momentum going for too much longer. We have to have the markets reset a little bit, and this could be part of that reset here. The uptrend has started to display itself. Let's take a look at the chart over here of the S&P 5. Actually, the Nasdaq. I want to look at that one first. NDX, and bring that up for you here in just a moment. Take a look at the chart over here, and you can see we've made a move right up to the 200-day moving average. Classic bear market rally move up to resistance, up to the 200-day moving average. We had a strong move up from 16,500 up to 20,000. That was a good 20+% in the past 3.5 weeks. Very strong, and it may actually tempt people to believe that the bear market is over, right? I don't particularly believe that, especially when we just rally up over here. If we got to rally up to the new all-time highs and through that, now that's a different story. Of course, that's 22,000, another 2,000 points from where we're at right now, another 10%. That would be a pretty good move, pretty sizable move, and probably would bring along a lot of stocks that have been trailing for the past few weeks. So we'll be keeping an eye on that. But as for right now, I think resistance here at this 200-day moving average, much like we saw back in late April when we had that. Remember that I talked about it, that the evening star pattern that came out with a green bar, a doji, and another red bar right behind it, and then the down day. Well, that led to a massive drop, which is what evening stars do. Evening star patterns are bearish, and they lead to more downside. Now, on the other hand, morning stars tend to lead to upside moves. We've had morning stars like we had over here that led to nice up moves, but the evening star pattern is very bearish, and so we'll see if one plays out here. If we get a down day today, it's looking like a potential evening star pattern. Is it going to follow all the way down like this? Probably not, but you never know. And we're not here to try and guess how far markets are going to go down or how long they're going to go down. However, we can look at overbought, oversold conditions and put the odds in our favor for making a contrarian bet. Now, right now, we know that the oscillators are very overbought, right? This is the New York Stock Exchange oscillator. Look at it, 242 right here. In the last couple of times that it got up to this level in the past couple of years, in 2023, we came down sharply here in 2024. Also had a high level in 2024, came back down hard as well too. So the odds tend to favor that we're going to come down off this overbought condition and correct some, because what ends up happening when everybody's bullish, everybody's all in, everybody has all their money in, there's no money left to buy stocks, right? Further, when there aren't enough stocks to go around, people start to sell. And when you get that selling happening, it tends to just snowball and go. The markets can move down quite sharply, quite fast. So I also want to take a look at the month end over here. I know we didn't take a look at this last Thursday. Wednesday was the last day of the month for April. And what we always want to talk about is we always bring up the monthly chart of the S&P 500. Critical to look at the MACD, which is in the second pane over here, right? This is we've got the black line and the red line. So when the black line crosses underneath the red line, that's bearish. And when it confirms for a second month in a row, that means we're in a bear market. Now, I know there's a lot of people out there who will argue with that, who will disagree with me and say we're not in a bear market. We had this bear market for 5 seconds, and we bounced from it, and now we're moving back up. I disagree with that until this MACD crosses the black line, and you can see it here. Let me open it up a little bit more here for you. Until this black line crosses back above the red line, we're still in bear market territory. How long could it stay this way? It could stay this way just for a couple of months, like it did over here, right? And then we crossed back on above there back in 2020. This is the COVID lows that we had over here. We came back down on the MACD, and then we recovered nicely and moved right back up. But I didn't feel like it was appropriate to start putting a lot of capital to work until I got that signal that the MACD had pushed into bullish territory again. So we're not in bullish territory right now. We had a nice long tail. Don't get me wrong, that looks very, very impressive after hitting those lows in April. But we crossed over in March, and we confirmed it in April. If we get another down month in May, even if we're within that wick of April, a big long wick over here, it's still going to be bearish, and we still have some potential here for targets on the downside. The 20-month moving average comes in at 53.95. Right, we crossed that already, and we came back down even further. But the 50-month moving average is the one that's got me intrigued. It's 4,700. We didn't quite get there on this low. It would have been nice if we had tagged that low and bounced off of it. Would have said to me that there's some really good support down there at 4,700. But we didn't quite get there. So maybe we can get back down there, and that would be a frightening move for a lot of people. We're at 56.86 right now. And a 1,000-point move down would be certainly very negative. But we need probably need some sort of a catalyst. What is it? Is it tariffs? Is it inflation? Is it slow growth? Whatever the case may be, we'll see what happens. All right. Last thing I want to show you as well too. Again, I want to go back to the Nasdaq here. Again, hitting resistance over here on only mediocre volume. That's a danger sign right here. So we understand why the markets are down today, because the markets have been up so much for the past couple of weeks. We have a big week of earnings. We have the Fed meeting this week starting tomorrow. They will come out with a decision on Wednesday. Likely that the Fed is going to do nothing with interest rates this week. They're not going to cut rates. They're not going to raise interest rates. In fact, the Fed funds futures are saying it's about a 98% probability. Now, if we move out to June, because of that strong report last week, the jobs report on Friday, the odds for a rate cut went against it, so it went up. So it's higher odds now of a rate cut coming in June. It's about a 38% chance of a rate cut at the June meeting. And if you look out further into later on this year, the odds get better for a rate cut. I still don't see one coming as of today. Things can change, of course, but I think as long as the jobs market remains strong and inflation is still not to their 2% target, the Fed doesn't need to cut. The economy is growing fairly well. I know we came in with a minus 0.3% print on GDP on Wednesday. I think the economy is doing much better than that. In fact, if you look at some of the metrics, if you look underneath the hood of some of those GDP numbers that came in last week, the economy is actually fairly strong. Right, there's some areas that are weak. Manufacturing is still struggling right now. ISM data, PMI data has been showing that, but still, I think that the economy is still rather strong here and doesn't need lower interest rates to stoke growth or to stoke perhaps even some inflation. I think the Fed is worried about tariffs and the effect that they're going to have on inflation going forward, and as they should. So I think they're going to take a pause here and really examine the data and let that tell them how to proceed going forward. So a lot of earnings this week. We have names like Palantir is going to be reporting tonight, along with HIMSS and Ford. We have Supermicro tomorrow after the close, AMD, Rivian, Arista Networks. Wednesday we'll be hearing from Uber, Disney in the morning, Teva, Pharmaceuticals, Vistra Energy, which we have some of that in one of our services, Flex, Oscar, Bunge, which is a fertilizer company, and then Wednesday we'll hear from AppLovin and Carvana, ARM Holdings, Cliffs Natural, Axon, DoorDash, Dutch Bros, Oxy, and a couple of other names too. So it's a busy week. Once again, it's a full week. Pay attention to what's going on to this week. Hold some puts, have some cash, have lots of cash available. And when you have some opportunities there to pick up some stuff on dips, go ahead and do it. If you saw some of my media last week, the one I did on Meta for CNBC Market Navigator. If you haven't had a chance, take a look at that. That was a lot of fun. Let me see here, CNBC, if I can find it for you. Yeah, here we go. So I did this video here for, well, actually, here we go. Let me put the volume down here. So I did this video with, or this hit with Dominic Chu and Kelly Evans on Tuesday afternoon, where we talked about Meta and talked about a play on Meta going in before earnings, and it worked out really, really nicely for a nice win. It was buying the 560 call for May 16th, and then it was selling the 600 call against it, which expired worthless on Friday. So that was a really fun segment. It was a good trade. It worked out real nicely, and hopefully it would be nice if they have me back on the show one more time. So anyway, that's going to be it, everyone. I appreciate everyone spending a little time with me. Sorry for keeping it short today, but it's a great day. Have a great day. Happy Cinco de Mayo. And if you're having margaritas, don't drink and drive. And I'll see you guys all back on Thursday afternoon. We'll be talking about the Fed meeting and some earnings and so forth like that. Take care, trade well, and if you're in the room, I'll see you there. Take care. Bye. Baby's hungry and the money's all gone.